moment. We have Udayan Mukherjee joining in.
Yes, we do. Udayan, hi, good morning. Today there's expected to be a bit of a bounce back, but yesterday was quite a brutal session for us. And in fact, the markets have, been on a downtrend since the start of the year. Would you be worried about the uptrend that we saw last year getting arrested?
Morning, Sonia. I think the truth of the matter is that the market's been extremely range-bound, and if you had asked me last week when we spoke whether I thought the markets would get this tight into a range, I would probably have said no, because at that point the market had lost a lot of ground in very swift time from 6,300 plus to below 6,000. It was bouncing off the 200 DMA, and most traders and chartists would have thought that the market was in for a slightly bigger short-term bounce. But the Nifty did not make too much headway at all. In fact, it got stuck even below 6,100. The up moves over 2 or 3 days were 20 points, 15 points. So it was a very labored kind of an up move, and most days were fairly range bound. So frankly, I'm at a bit of a loss to understand this kind of a volatile trade within a very limited range. And the fact that over the last 4 or 5 sessions, the Nifty did not move away too much from its 200-day moving average from which it had bounced off. So it did find some support around 59.50, 59.70, but on the bounce back it got caught within just about 70, 80 or 100 points, which is usually not a great sign. So while it would have been expected to see the market find some support at the first test of the 200 DMA, which usually happens, I think now the second test might be even more important and formidable in determining whether we are still within some kind of a broader medium-term uptrend. So I think in the next couple of days, the weekly closing and then leading on to the vote on account session, the Nifty, it's imperative that the Nifty does not violate the 200 DMA once again on the way down, because it's one thing to remain in a bit of a tight range and spend a few days consolidating. It's quite another to repeatedly test the 200 DMA and settle below that. And I hope, and I guess the bullish traders will be hoping that that does not happen over the next 2 sessions.
Absolutely. Well, actually, then the fear is that there will be a lot of global rout and India will not be spared. How are you reading the global weakness and impact on India?
Well, frankly, the last time the market went down below 6,000, which was led by all those fears of emerging market panic and weakness and FII outflows, I think the global mood was probably even more edgy at that point in time. This week you've seen those comments from Janet Yellen sort of stabilize matters a little bit, but towards the end of the week the global fears have come back on the table. But I think this time's weakness has probably a lot of other things blowing around it as well, and not just the global factors. But that I maintain would be the most important decisive factor over the next few weeks. Right now there does not seem to be any major panic in the global space. You would have witnessed that FII outflows also have sort of ebbed off a little bit. They're still selling, but on the odd day they are buying as well. The last reported figure 2 days back was a small buy figure. So the kind of selling that we were seeing in a concentrated fashion over the last 3 or 4 weeks seems to have ebbed off a little bit after the comments from the Fed president. But I still think there is edginess in the global space, and that will probably be quite crucial in determining whether the Nifty manages to bounce off or hold to these supports of around 6,000 odd.
I guess we can expect that it will hold off today then for more reasons than one. But any expectations from the vote on account on Monday, or will it be a no-show like the rail budget was?
I doubt it very much, but it may cause volatility for a day on Monday, because markets have these very big love affairs with the union budget. They don't mean much most of the time, but the markets tend to swing around quite a bit. This is not even a budget, it's an interim budget where no major changes will happen. But there are 1 or 2 macro things which are floating around. Will he optically present that 4.8% fiscal deficit number, or will he do better? Because the finance minister usually wants to surprise the market a bit on the positive side by pulling out a number which is a bit better than he promised. So he could go to 4.7, maybe even 4.6, and will the market cheer that? I've heard a lot of people talk about the importance of the target for fiscal deficit next year. Some say 4.4, some say 4.2. And of course the borrowing targets for the next year. But I think those are not so important, because you don't even know what the next government would be, who the next finance minister will be. So a promise made right now is just that, a promise, and it's not cast in stone. but it may lead to volatility during the day. I mean, if on Monday we were to hear a 4.6% number and a 4.2% promise, temporarily we might see stock markets feeling quite happy about it, and then realization will dawn that this does not mean much. Now, on that arithmetic of getting to 4.8 or 4.7, I think all of us and the market clearly recognizes that this would not have been possible had it not been for that very large, nearly 20,000 crore dividend from Coal India and the last minute scramble to push up some money, maybe pushing away some of the subsidy payments to next year, maybe almost to the tune of 30,000 crores. You know, the bigger question to ask is not to get wedded to that 4.8% number, but the quality of arriving at that number. And I think the rating agencies and smarter market participants do understand that it's not just about arithmetically arriving at a number which was promised, but the route to that number. And I think the route to that number will not please a lot of people, because on the current account deficit we have made some significant positive strides because of that gold deficit, the killing of the gold import, which has led to that improvement. But on the fiscal deficit front, we have not been able to make such big structural strides, which I think might, on closer scrutiny, leave the market disappointed. But on Monday, there might still be some sentimental to and fro, maybe a 50 to 80 points kind of move either way for the Nifty.
Okay, well, that's the expectation from the VOA, Udayan. But what is your key takeaway from the earnings season this time? The fact of the matter is that it did leave a little bit of a sour taste in the mouth this quarter.
You know, it's been very patchy, Sonia, but you know, I think the takeaway from this earnings season is that you can't even say, barring one or two sectors, where you've had a clean flavor of outperformance from a particular sector or underperformance. I mean, take the sector that you track closely yourself, autos. You've had surprises from Tata Motors and Maruti, but you've had disappointments from Bajaj Auto and Hero Honda. You've actually had good results from many of the ancillary companies like Amara Raja. So patchy. You look at capital goods, JP Associates was a howler, BHEL did badly, Compton was not so bad, L&T was not so bad. In pharmaceuticals, the same thing. Cipla was a dismal performance, Aurobindo and Dr. Reddy's were quite good. So I think the key takeaway is that there were many hits and misses even within sectors, but people in the market would not come away thinking that we've established ourselves on a firm recovery path in terms of earnings. So it's not like earnings bottomed out last quarter, and this quarter there was a secular sign of improvement in earnings across sectors or across the market. So there were hits and misses. If you're optimistic, you will point to the 5 numbers which were good. If you're pessimistic, you will point to the 5 which were not so good. But I think it's probably a very patchy set of numbers that we got this time around, and the market probably needs to see more to conclude that earnings from remaining a headwind, as it has been for the last many quarters, has finally become or started becoming a bit of a tailwind for the market. We may be arriving there some point in the next couple of quarters, but I don't think we are there quite yet at the end of this earnings season.
All right, Udayan, thank you very much for joining us, and of course we'll touch base with you after the vote on account. Thank you for joining us. Have a good weekend.